8% interest rate. Now what? Yikes. Yes, the rates did go up over 8%. Not sure what they are today, but they are way higher than when they were 3% just a few years ago. Who knows if it's going to go to 10% or 11%. So if you want to buy a house, what are your options to buy a house with such high interest rate? Well, I've always believed that you buy when you are ready, willing, and able to buy. You have to buy because of circumstances. Maybe you're getting a divorce, maybe you're having a baby, maybe you want to move down, maybe you want to move up. So do you really have to buy? Are you ready? Is this the time? And are you able to buy? Do you have the qualifications to buy? Do you have the down payment? Even if it's 8%, can you afford to pay the 8% interest rate? Well, if you do qualify, go for it. But the question is, that's something you have to answer. One thing you don't want to do is don't want to chase the market where you're going to wait for the 8%, which may go to 9%, which may go to 10%. I have some friends of mine, who wanted to buy a house when the rates were 3.5%. Now they are 8%, they're still waiting. But guess what else they are doing? They are crying. They are crying because of two reasons. One, they did not buy the house when they wanted to buy it because it was about $800,000. Now the same house is costing them $900,000. But more than that, they could have gotten the $800,000 house for 4%. Now they have to buy the $800,000 house and pay $900,000 because the prices went up, and at the same time pay 8%. So they're crying all the way to the bank, if I should say so. So you never chase the market. You never know what's going to happen. One thing I can tell you is that if you buy at higher interest rate, you can always refinance. Let's say next year it drops to 5% or 6%, and that's wishful thinking, or maybe 4%. Refinance and move on. But in the meantime, start two clocks that I always mention. The first clock of, assuming you take a 30-year loan, you're starting the clock today or right now to pay off your mortgage rather than waiting 5 years and starting your 30-year clock. Start that clock today. The second clock that you start, which is very important, and that's why it's okay to buy at 8% if you ask me, is the clock where if you buy now, you're paying your mortgage off in 30 years. At the same time, every year that you make payments, you're building equity in two ways. One is every time you make a mortgage payment, you're building equity every month. The second thing is over the 60-year history of home price appreciation, the average is, let's say, 6%, but I'm going to call it 4% appreciation. That means if you buy it today, in 30 years, your home should appreciate in value at an average of 4%, anywhere from 3 to 6%, depending on when you buy. So the two clocks, very important, is you start paying your equity every month, and every month, every year, you're gaining 4%. So if you buy a house today, let's say I told you about that house that you're buying for $900,000 at 8%, then you're going to refinance when the rates drop to 4, 5, 6%. That house in 20, 30 years will be double the value or triple the value because it appreciates at 4% per year. So buy when you are ready, willing, and able to buy. Don't chase the market. Don't cry about prices going up or down. You can never tell where they're going to go.